Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so today is July 1st.
Okay.
And we are going to do a market update for Las Vegas real estate market.
July 1st, 2022.
2022. So first of all, we apologize. So this is probably the longest we've gone without making a video in a while. But we went on a little vacation. So we took a little break from making the videos. And then going forward, we're still going to make like good quality videos, but we're probably not going to make like 6 a week. Probably make a little less, but because we want to keep the quality up and we don't want to have to keep saying the same thing over and over. Unlike other channels that just make every 5 videos a week all about how the market's going to crash. And then, okay. All right. So this is an update for the Las Vegas real estate market. Now, what we've done is we've broken it into 2 segments. We're going to talk about houses first and then condos. And then what we're going to show you at the end is going to blow your mind. When you see this, it's going to like, your eyes are going to go up and say, oh my gosh, like, because sometimes you get pieces of data, they don't make sense. And when we talk about the market in general, everyone wants to pick a single number, but it's very difficult to represent a whole market with one number, right? Because your lives, like if you don't live in a median home, you don't care what the median home values are. Right?
And almost no one lives in a median home.
Yeah, like literally nobody. It's like the thing they used to do with the average American. And they would say, oh, the average American makes $38,000 a year, family or whatever. And it's like, but if you're not that person, you don't care. And who cares what the average person makes, right? Okay, so we're going to start with the Market Action Index. This is one we show. This is sort of that needle that gives you a broad idea of what's going on. Now, this is for houses, not for condos. You can see the Market Action Index is 60, strong seller's market. It was at like 71 last month. It's definitely swinging back. This happens every year. The market cools a little bit, and then it starts taking off again in...
at the end of the year.
End of the year, November. Remember, 40 is pretty much where we always are. In Vegas, in the last decade, until 2019, we were between 30 and 40. We're actually right about 40. So we're still a lot hotter than we were we still right now have a hotter market than we have in the past, even with interest rates going up. Right?
So if you don't believe us, talk to anybody who's trying to buy a home. They're still not having an easy time of it.
Yeah. Okay. Now we're going to go through all the numbers and try to get you an idea of what's going on. So we'll start with the median list price. Now this is for homes. And if you notice here, the trend on this is that the 7-day average has been more than the 90-day average. But all of a sudden that's the opposite. The 7-day average is below. That's sort of a leading indicator. It does not mean the market is going to crash. It just means that moving forward, the more homes in the last 7 days have come on the market at a lower price than over the last 90 days. Okay. Some of that, too, is because 90 days ago, we had a super hot market and people were coming on the market at a higher price. So I'll kind of put this into a simple example. Oana is actually really good at this. She could probably explain it better. But if your house is actually worth $400,000, but you put it in the MLS for $425 because you're expecting, what's the psychological reason? Like, why do people do that?
People go fishing. That's really what it is. People think that, well, I'm going to put it, I know my house is worth $400. I'm going to put it on there for $425 because somehow crazy Californians don't know the difference. That's one thing for Las Vegas in particular.
Okay.
And then the other thing is, well, I know my house is worth $400. I'm going to put it in for $425 so I have room to negotiate. That's a bunch of hooey. Okay,
so what happens is inventory goes up and there's more homes on the market. The home doesn't mean the home is worth less. They just don't go crazy with their initial price.
Right. So, I went and saw a seller this evening, and we were talking about what the property is worth. And, of course, there was a range. I said, well, it's between this number and this number. And I said, if it was my house, I would list it at this particular number, and this is why, because, I would not want to put it on the high end because I want to sell the house. I'm not here to go fishing. I'm here to sell a house, okay? And I wouldn't want to do it on the low end either because there's no reason to leave money on the table. So this is why I would pick this number. And it's a lot that way with a lot of people who want to be reasonable, and they're just interested in selling their house. They're not interested in fishing. They're just interested in selling their house for fair market value. But there are people who, like I said, they want to either leave themselves room to negotiate or they want to go fishing. I spoke with a seller not that long ago. His property is worth about between 450 and 470, and he wanted to list it for 550.
Okay, let's talk about that.
That's by the way, that house is still on the market.
Okay, let's talk about that. 450 to 475, you said that's what it's worth? Okay, so when you see that somebody whose house was listed for 550 just dropped it to 525, you're going to say, oh my gosh, prices are falling. Well, yeah, but the house is never worth that. That we're talking about list price changes. So that's one of the numbers, which is, we look at that, we don't really care that. It's not meaningful. All it means is that the market went from super hot to just like a normal hot market.
Right.
Okay. The next slide is inventory. This is definitely an increase. This is more than we had last year at any time last year. We do have more inventory. However, we're still well below the long-term historical average. If you look all the way over to the left on this slide, you can see for Las Vegas itself, we have about, and this is just the city of Las Vegas here, we have about 5,500 just in the city. We're actually probably have about 9,000 if you include North Las Vegas and Henderson, because that's like the other half of the valley there, right? So you have all those people, but it's definitely more. This is a combination of two things happening at the same time. It's the normal upward trend that you can look every year where it goes up. It does that every year. And it's the combination of interest rates choking off a bunch of financing buyers.
Right.
But not the cash buyers and not the buyers coming in with a ton of money. It's really just choking off those high loan to value, like I'm putting 10% down and it's all based on a payment.
Right. And the interesting thing is that these statistics are, for the most part, the houses that are available to everyone, right? They're not necessarily the houses that are pocket listings, which means that they're not listed for everybody to purchase. They're not for sale by owners. They're not the people who are emailing me and texting me every day saying, hey, do you have any off the market properties? I want to buy them. They're not those people. So there's still a whole segment of the market that's not being represented by this.
The next chart is median days on the market. This is very interesting. Now you would expect that as more homes come on the market, the days on the market increases, the median increases. But what you're seeing here, that is not the case. The median is basically not shooting up. It is basically staying pretty steady. This is pretty fascinating. Like this is actually, it's still, the median days on the market is still normal.
Right. So if you're selling a house, you're still in good shape, but please don't expect your house to sell in 3.2 seconds.
Yeah, it's not going to sell super fast. Okay, we're going to go do condos now. But what we're going to do is, before we do, we're going to come back to one house slide at the very end. And this is the reason why we're going to do this is because it's going to blow your mind when you see this. It's going to change your perspective on this, because like I said, people want to they just want a number. They just want something simple. They want to be able to decide based on some simple information. And the thing we're going to show you is you're going to go, wow, that's very fascinating. Okay, we're going to jump into the condo market. Now the condo market, this is the market action index. It's a 71. It's less hot than it was last month, but it's still a hot market.
It is. So remember, a lot of the reason why it's much hotter than the single family homes is because of the price point, right? It's just a price point that is more affordable for more people.
Speaking of price point, median list price, you can see the trajectory here. It still looks like it's heading up. $285 now for median list price for a condo. It wasn't that many years ago that was a median list price for a home, maybe 3 or 4 years ago in Vegas. So now, but you can see that trend where the 7 days is the same as the 90-day average, which means it's sort of chilling out a little. So Oana, the average person buying a condo is putting more money down or paying cash, literally.
Right.
Why is that? Like, why wouldn't they just always go get it? Like most people get, like 25% of all people pay cash for a house, and then the other 75 people get financing. But it's not like that with condos. So why is that with condos?
So condos are a lower price point.
Okay.
So they're more affordable. The other thing with condos that I think people sometimes forget to think about is they do have a higher HOA fee.
Okay.
So that does kind of impact your monthly expenditure for the property. So there's a lot. It's a little bit different for condos than it is for single family homes.
What about a condo complex where 55% of the units are owned by investors, and someone wants to go get an FHA loan and buy in that complex? What happens there?
They can't.
They can't. Why not? Why can't they?
So there are rules, which is part of the reason why there are rental restrictions in communities, because they want to keep encouraging owner occupants. And they also want to keep their financing options open, because depending on the type of financing that you are trying to use, there are different rules for that complex as far as how many, the ratio between owner occupants and non-owner occupants.
Okay. So we're going to keep an eye on this median list price, but obviously interest rates don't really affect condos as much as homes, and lower price point homes aren't affected. You're going to see at the end when we show you this, you're going to be like, wow. Okay. Inventory for condos is going up, but it's still well below what inventory was just 2 years ago, 3 years ago. You can see we're nowhere near. The trend is higher. So there's more percentage coming on than there were even a year ago, but still, it's still a shortage. That's why we have a hot market, right?
Right. Yeah, and it's tough out there for rentals too. I mean, I do have people calling me saying, hey, do you have anything that's not on the market? And I'm thinking, well, if I had it, I would put it on the market, wouldn't I? But yeah, so it's tough out there. And I have rental properties that I property manage that are coming up empty, and it's really amazing how little time it takes for people to want to rent them. I mean, I have people today who their lease is up tomorrow, and they still don't have a place to live because they've been looking and they haven't been able to find anything that checks all their boxes.
The next one's median days on market. Now, you would expect as inventory climbs that the median days on market would start to take off, but it really hasn't been doing that. This does lag a little because this is based on when it closes, and inventory leads a little. So we do expect this to go up, but even if it goes up and it doubles, we're still even where we were last year. And even if it goes up by 4 times the amount on market, we're still around our baseline. So we still, with median days on market for condos, it's still not, you're just going to roll into Vegas and be able to pick from a numerous bunch of condos that are cheaper than they were last month, right? Right. Is that what you believe?
Right. So, look, all of these indicators, we do realize that they lag. We realize that anything that closed escrow in June probably went into escrow in May or in April, so that these numbers do lag. But you do get to see kind of the trajectory, and you do get to see that it's not a bloodbath out there.
Okay. This is the next slide. This is the last slide we're going to show you, and then we'll do our summary. Okay, now I'm going to put the slide up right now, and we'll talk about it. So this is the median list price by the 4 segments of the housing market. So the top blue line is the top quarter of all homes, the most expensive quarter. And then you have the green line, which is the second most expensive quarter. And then the yellow line is the third most, and the red line is the bottom most. These are for single family homes only. So basically, if you went halfway between the green and the yellow line, that's the median, right? Now, what you notice here is that top line has substantially higher. If you look at the bottom 3/4 of the market, which is literally 3/4 of the market, it goes up it appreciates at a pretty normal rate. But this top part of the market, you can see where it's taking a lot of heat in list price, meaning list prices have dropped. List prices haven't really dropped in 3/4 of the market in Vegas. If you stripped out the top quarter of the market, pretended it didn't exist, or it was not Las Vegas, it was like California or something, right? It would be there would be zero signs of anything going weird in the market in Vegas. Everything would seem completely normal. But the top quarter of the market is, you're seeing this reaction because, if that $2 million house that you say, oh, I'm going to ask 2.2, and then you reduce the list price by $200,000, that's a lot. But if you live in a $400,000 or $500,000 house, do you really care about what somebody in the $2 million price range is doing, because does that affect the person who's potentially going to buy your house?
Not if we're talking about the people in the $400,000 house.
Yeah, they don't care. It's like,
no.
Yes, it's happening in the same geographical location, but it's like a completely different market. It would be like saying, well, I'm going to buy a house, but cars are really expensive. And they sell cars in Vegas. And you go, yeah, but that's a car and this is a house. They're different things. But two houses are the same thing. But is a $2 million house in a guard-gated neighborhood the same as a $400,000 tract home?
No.
No, they're completely different, because no investor is going to go out there and buy a $2 million house and try to put tenants in it. You could buy 5 $400,000 houses, put 5 tenants in it, and then you have a lot of benefit. You get more net rent than you would with one house. And
although to that point, there is a segment of the market that has actually been purchasing in the luxury market for rental purposes, because there is a market, and that's something that's really different in Las Vegas. We didn't used to have that. We used to have, like Todd said, if you had $2 million, you'd go out and you buy multiple houses because you're going to get more rent and you've got less downside and that sort of thing. But we do have a budding luxury rental market.
We actually had a guy, when we first started doing the channel, I think it was 2010, maybe 11. Mm-hmm. He was watching the videos. Mm-hmm. He called me, wanted to meet. We brought him in the office. He says, I have $5 million. I want to buy 50 houses. We go, that's easy. We'll just find houses between 80 and 100 grand. Mm-hmm. We'll go out and get 50 of them for you. Mm-hmm. And the criteria is, can we get $1,000 rent? Mm-hmm. So we found all these like $90,000 houses that we could get $1,000 rent. He literally went and bought 50 of them. Mm-hmm. One of the agents, it was one of the people on our buyer team. We said, your only job is for the next 2 months to find this guy 50 houses, okay? And this was back during when there were still a lot of bank-owned homes, but it wasn't super competitive. There were more houses on the market than there were buyers buying. Mm-hmm. And there were most homes were being purchased, over 50% were being purchased cash. Mm-hmm. So this was a guy who was, and these homes are all worth over $300,000 now. So he's clearly tripled his money. Plus he's probably made back all his money in rent.
Yes.
The individual actually passed away, and all the properties were inherited by somebody else. And there's somebody else managing them now, because we didn't manage the properties. But you can see that there definitely is an opportunity for people with cash when a market presents an opportunity to go, buy investment. And we're not saying you should go out and buy investment properties. We're just saying that if you're buying homes in a high price range, you're probably not buying investment properties. Mm-hmm. You're probably buying it because it's the house you want to live in. Mm-hmm. I just think it's interesting that top quarter of the market is going to potentially cause numbers it's going to skew the numbers, which is why we use median and not average, mm-hmm. right?
It is going to skew the numbers, and it's also going to provide the Chicken Little people out there with a lot of wonderful clickbait.
Yeah. So we're going to do another update in 2 weeks. The main things we're looking at is that market action index, which is just this general needle, that gauge thing. Mm-hmm. We're going to look at the inventory, and we're going to look at the median days on the market. We get worried when median days on market gets really high, but it's still low. We still have a seller's market. You could argue all day you want, yeah, but inventory is going up, and somebody posts on the channel and says, no, there's 10,000 houses on the market. They're not. And they may be counting, when I went to MLS, there's 7,500 condos, townhomes, and single-family residences in active status all over. It does not include homes. What they did is they somehow got a number of homes off the market because they're under contract. And you can't take 1 month, one number, and then the next month go find a bigger number because it suits you and try to point at that. You have to be consistent, use the same numbers. This is why we use the same numbers every month. Because we don't really care. I mean, you don't care if there's 3,000, 5,000, or 10,000 houses on the market. You just care about the change, what the delta is month over month. So we pick only Las Vegas, not Henderson, not North Las Vegas. And we just focus on that because we can get consistent numbers, and we can look at these numbers and help us give information to you, help you make decisions. But we still sort of look at what's going on in the market, which is it's still pretty stable. Yes, it's not crazy. So if you think the market being way up here in a craziness, not a price point, and being less crazy means crash. That's really not the case because it can't just stay crazy all the time. It's got to get to normal. What we worry about is if that needle that you see, the market action index, swings past 40 or past 30, which is a buyer's market, and goes to like 20 or 10. That is potentially bad because now, you have way too many people selling, you have not enough people buying. But it looks like what we're hoping is this thing makes a super soft landing in Vegas. Other markets, I don't know. Nationally, we don't know. We track that too. Mm-hmm. But for Vegas, I mean, I'm pretty thrilled with the numbers. Everything we're seeing right now is stuff we basically said was well within the possibility of what could happen.
Right. And we do understand what's going on out there. We did hear what Jerome Powell said out there, that he really is not focused on the recession. He's more focused on inflation, and if that means that his steps to curb inflation lead to a recession, so be it. We did hear that too, and it is cause for concern. We're not saying that that's not cause for concern. We're just going over the numbers that are available today, and we're using the same data sources, and we're looking at the same types of homes in the same areas, so we can establish a trend line, because those trend lines will hold true and they'll provide information on which to make choices going forward.
If you liked the video, please subscribe, hit the notification bell, share the video. And if you want to have a lot of fun, you can go back and watch market, because I still have all the market updates that I did from 2009 and 10 and 12 plus years ago. You can go back and watch those. It's probably just me. I'm in a different office. I'm in the building we used to be in, and I have a lot more hair. And it's not really gray. And you probably won't recognize me. Is that Todd? But if it's on this channel, it's me.
It is you, and I would recognize you.
You would recognize me. Wanda doesn't look any different. It's funny because we have some videos. She started doing videos with me in 2010, and she looks exactly like she did back then. You can't. She looks no different at all. So anyway, thanks for tuning in, and we'll see you on the next video.
Bye.
Bye.